All right, 3M has just recently reported their earnings for quarter one of 2023. We'll be taking a dive into the financials of the company and seeing how they've performed in there. As you can see, the stock price over the last couple of years has absolutely just been destroyed. But within my portfolio, the dividend yields, 5.70%. I've got 37 shares at an average price of $146. It's currently trading at $105 at the moment. And so I'm negative by $1,500, which is 28% of my total stake. So my total equity is just under $4,000 at the moment. So, but 3M is probably the most consistent, long-standing dividend-paying company, for a very long time. When we look at over to Seeking Alpha and the dividends, we'll look at the dividend history here. They've paid a dividend for 64 years, but every single year for those 64 years, they've at least increased it. So we'll have a look at the percentages that they've actually increased the dividend. So, recently, 2022, they only increased it by 0.68%, same as the previous year. All right, but before that, 2%, 5%, 15%, 5%. So, not too bad numbers there. We'll have a look at the financials of the company, and we'll see if there's a reason why they're slowly, decreasing the growth of that stock. Now, one thing I like to do before looking on any sort of news on YouTube is when companies release their earnings report, and the first thing people do is look at the news headlines, and they start to gauge a simple bias to that company. But what I want to do firstly is look at the financials first before I look on the news. So then that way, I don't really have a bias just yet. I can come up with my own expectation of, how the company's going over time and make up my own assessment. But in terms of the sales, so they've reported $8 billion for quarter one of 2023, which when you compare it to last year of 2022, it's actually down by 9%. The gross profit, is down 14.6%. The operating income is down 24% from last year. Earnings per share is down 21%. So, when you think about it, it looks, very doom and gloom, doesn't it? But, when you go back to the day, the stock price is trading up by 2.34%. So, why is that? If the stock price, if the financials of the company look extremely terrible, and yet the stock price is trading up, what's going on there? So what's happened is the analyst estimates have come in a little bit shorter to cater for, the demand just not being there for 3M. So the revenues estimates was $7.47 billion, but it's came just over $8 billion. So therefore, it's actually, beaten estimations, and it's made it to sound like really good on the news. And then with the earnings per share, the analyst estimates were $1.58, but it's actually come up to $1.76. So on the news, you'll hear, 3M beats on revenue and 3M beats on earnings per share. Although in reference to the previous history of the company, it's actually going negative. Okay, so that's one thing that we've got to take into consideration when, analyzing a company or buying stocks of a company. And this is a sheet of all their segments within the company, and it actually breaks it down, a lot more. So there's a couple of things that they have increased their numbers in. So let's look at abrasives. So 329 million units was sold in 2022 of quarter one. This time they're actually up to 341 million units of quarter one 2023. But they're actually down a lot in most things. So you look at personal safety here. They've sold 1.1 billion worth of personal safety in 2022, but this time they're down to 903 million. Looking at electronics, 2022 they sold 923 million. They're down to 672 million. So just one thing with this is obviously 3M provided a lot of services and products to in the height of their pandemic. There was a lot of demand for it, and now we're coming down to post-pandemic levels. So everything's quietened down. If you were to walk out your street, nobody's wearing a mask. All right, there's no lockdowns that you can hear of, and that police aren't enforcing anything in regards to masks and and anything in regards to the pandemic. So the demand just isn't there, which makes it completely normal for 3M to pretty much be decreasing all of their sales. So I personally don't think there's any real drama there. But this is a recent statement coming from 3M, how they're trying to streamline and simplify their business so that they can drive growth, drive margins, and increase their cash position. So the first announcement was a couple of months ago of 2,500 pers or people being reduced in their job roles in the global manufacturing space. It's now been said in the news that they're further reducing management and people within the company by a further 6,000, which is a lot of numbers. Now, I think because there is not as much demand for 3M, it actually makes sense for them to reduce, the amount of people in their business. And I think this is actually a positive point for the company itself. This is obviously going to reduce all the costs for wages. Generally when there's a recession in the market, wages tend to be the first thing to go because they can't afford to pay their employees. But this is really going to improve, their costs and their margins, which is going to look a lot better on their balance sheets for the next quarter. So that could be a good thing for quarter two. But this is what they're trying to improve here. So reduce corporate costs of management layers, simplify the supply chain, streamline go-to market models to closely align with their customers. And they're going to focus on high growth markets, invest in emerging areas such as climate technology and next generation electronics, and accelerate factory automation there. So this is a very good goal for 3M, and hopefully it does streamline a lot of their work, which would improve costs and therefore making a positive impact on their balance sheets for quarter two of 2023. So moving on over to macro trends, and I just want you to see, the different revenues of the different quarters, all the way back to 2029. So, if you look at, on the height in the pandemic, what was that, 2020, 2021? The top line revenues here were, just under 9 billion, so 8.9 billion. And then as the pandemic started to slow down, the demand for Triple M started to decrease, and now, it's going down to, 8.8, 8.7 billion, 8.6 billion, and now it's sort of flatlined to $8 billion within the quarter. So there's no real surprises there. I don't see it as a bad sign for 3M. It's just, a reflection to, the supply versus demand within the market. And that's really affecting, the stock price, over the last 3 years. So this is the 3-year chart. Now, if we have a quick look back to, pre-pandemic levels with 3M, let's go back to the 5-year chart here. The stock price was sitting at $204, as you can see there. At the height of the pandemic, it was sitting at, $203. So, that's sort of very fairly high. That the height of the pandemic, when they were most busy, was just a regular day back in 2018. It was the exact same stock price, but now because you've seen the decrease in the revenue from the height of the pandemic to the post-pandemic, you're seeing that the stock price decline quite a bit. Right, so now the big question is, do we buy 3M or not? Now, the first things that I think of is, when you look at the revenues, it really isn't declining, all that rapidly. It looks, pretty much similar to pre-pandemic levels. It's very in line. It's a very flat company. It's a very boring company. They don't report ridiculously massive revenues, or there's never a time where it decreases so much to the point where it's very shocking. And then you look at the dividend history and the dividend yield. They've been paying a dividend for 64 years, growing that dividend for 64 years. And then when you look at even the stock price from pre-pandemic levels of a regular price of $193 in 2018. It's now trading at 105. I think it's a buy. I think it's extremely cheap at the moment, and especially I think given that they're going to reduce 0.5 thousand people within their company, it's actually going to help out with the financials. It's going to look really good on the balance sheet. Coming up to Q2 of 2022 earnings, I think it's going to be a beat, which is going to drive the stock price up for all those retail investors. And this could be a very good opportunity to buy the shares at a cheaper price, get a better percentage on your dividend yield, increase your yearly income. I'll be doing a follow-up video for Q2 of 2023 because I want to see if my expectations or my prediction is accurate. My prediction is they're going to beat estimates and the stock price will slowly start to drive up. But let me know in the comments below what you think. Are you going to buy into 3M company? Are you going to sell it because of the declining stock price? Let me know your thoughts. But as always, like the video, make sure you subscribe. It really helps out the channel. And I'll catch you next time.